think maybe the other big one is with some excitement back in the markets again. We're seeing meme coins and activity rip again. Solana activity noticeably upticked. Everyone's favorite pygmy hippo token went crazy and spawned a bunch of other zoo animals. Animal spirits going crazy on the timeline and on the chain again. Chaos Labs, the leading on-chain risk management firm, recently launched its new flagship Oracle product, Edge. Edge delivers integrated, high-precision risk and price data for any application with a market. Follow and reach out to Chaos Labs on X to learn more.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
All right, what's up, guys? Welcome back to another episode of OX Research. Today, I'm joined by Mark and Ryan from the Blockworks Research team. Mark, Ryan, thanks for coming on, guys. What are we looking at today? How do we feel about the markets? Anything exciting going on, or categories, tokens that we're looking at?
I was on last week feeling pretty bullish about the markets. Not much has changed. Bitcoin is kind of struggling around that 65, 64K mark. But then I'm looking at like inflows for on ETFs. Past 4 days for Bitcoin has been over $1 billion. And I think for ETH, past 4 days has been like something like 150 million. And without like actually running the numbers or looking at the data, just off of my head, I think that might be the most 4-day net inflow run Ethereum ETFs have had, well, the US Ethereum ETFs have had. So those are like little positive signs, plus stablecoin market cap is growing. So, more inflows into chains, more inflows into the ETFs, things are looking nice. Didn't seem to be like a traditional down September month for Bitcoin as it's historically been. So, yeah.
Yeah. It seems pretty positive out there from a price action perspective. I think that the Blockworks Research team has put out some pretty interesting pieces on where we see value in the market. The Arbitrum piece was pretty nicely timed. We have a pretty interesting one on Metis that's come out. Previously, we did some interesting work on Metaplex, which has worked out really nicely. So, a lot of the places where we saw value in the market, we're seeing those still compounding in the current environment, which is nice. And we have some interesting recs out. Sol ETH is, on my screen at least, is trading at 0.06, which is near all-time highs, which has been, a lot of people on the Blockworks Research team have been pounding the table on that one. So, so far so good. Still pretty skeptical of ETH flows on the margin. I think if you are going to get bullish on that, it's much more likely to come in Q1 than it is today. But, who knows, when FOMO kicks in, anything can happen.
Yeah, good call outs. I think maybe the other big one is with some excitement back in the markets again. We're seeing meme coins and activity rip again. Solana activity noticeably upticked. Everyone's favorite pygmy hippo token went crazy and spawned a bunch of other zoo animals, animal spirits going crazy on the timeline and on the chain again. So that's always interesting to see. I think when we talk about maybe reports as well, a meme coin report I think was also quite interesting when you look at the top gainers for the past week. Those dogs and those frogs are back up at the top again. So it's just one of those things we've continued to see.
Sorry, did you plan the animal spirits reference?
No, that just worked out for me.
That was fantastic.
And I guess to keep going in terms of like exciting things or maybe just positive things we're seeing in the markets, not to be, you can excuse me for being a little bit of a macro LARP again for briefly, but we're seeing excitement in Asia as well as the US. Recently over the past months and maybe year, I guess you could say at this point, the US kind of policy shift towards crypto assets, ETFs getting approved, the sort of Republican GOP positioning in regards to crypto has changed quite a bit. They've become fairly positive. We're seeing maybe some, sources in China say that, former ministers are saying that they need to take another look at crypto, maybe their policy, their stance on it. I believe trading of crypto is still maybe banned in mainland China, but they tend to flip flop their position pretty frequently. Actually, like historically, it's been banned and then it's not been banned. So maybe the sort of positioning from the U.S. policy wise and the activity in the markets is having them consider otherwise. And we're seeing the Chinese market has also been doing quite well lately. All markets, honestly, at this point, have been doing quite well lately.
I mean, I would take anything coming out of China with a grain of salt. Especially when it comes to crypto, and especially as it's not from somebody in like current leadership. It was from like a round table this weekend. I mean, that being said, when I heard that, I was thinking, is this kind of like desperation? Are they, they've had China's had 5 quarters of like deflationary pressure. I think that's like the longest since they joined the WTO, and the stock market hasn't done well. Real estate, debt, it's just been a pretty subpar, to say the least, few years for China, and they've just released like these liquidity packages, trying to like boost every sector that they can, and it seems to be mostly from the supply side, which I'm no economist, but doesn't seem to be. It seems to be more of a demand issue with China right now. So maybe I think the packages should have been more focused on that. Even then, I still don't think they're large enough. But it just makes me think: are they trying to like seep into these different ways, like crypto, to try and get any kind of demand just from just regular retail or whoever, like just inveigle this to try and get like prices and GDP and everything up again? Because I mean, they're projected to come in under 5% this year, which is not typical for China, bar this COVID period. So I don't know. Things look kind of rough over there, and then Hong Kong is their Western outlet, their little like guinea pig to try all of this stuff, which I'm happy for. It's like two system kind of model, but yeah, I'm not overly bullish on like this one report from them.
Yeah, some pretty. I mean, historically, when you see um, countries either explicitly ban short selling or issue stern language around like how companies need to buy back their own shares, like me, I haven't really looked at it systematically. Maybe it signals a bottom, but it certainly signals desperation, right? Like to have to kind of impose those measures on like really important companies is like it says a lot. It says a lot. Yeah, China's been tough. It's yeah, you've all seen that chart where it's like number of like economic metrics China posts over time, and then she gets into power and it's dropped off a cliff. Um, so like in my career and thinking about China, I kind of, yeah, totally always take it with a grain of salt. Seeing how bad the measures have been coming out of China, I'm like shocked that we didn't go into a global recession, given how important the country is, and especially how important it was in 2008 and getting out of that crisis, 2009. So yeah, I don't know what the hell's going on out of China. I don't trust the data. Um, it's really hard to figure out. But the stock market's ripped, right? Um, an insane rip. So that should be good for liquidity, hopefully, and then therefore crypto.
Yeah, it was 25% up in like a couple of days. I don't know how sustainable that is. But then when you're talking about like how the world didn't enter into a kind of, China's pressures on the world, I think it was like from the Trump era policies when they started to put increased tariffs and kind of like disentangle themselves a little bit more, kind of helped with that like supply shock. But then also I kind of think that China's deflationary issues kind of help the rest of the world, like from their inflationary edge. Like while some countries were exporting inflation, China was exporting deflation, lower prices, lower currency, lower labor cost, and if that low energy prices. So that I think that low key kind of helped with the rest of the inflation situation globally. So I think it's been great. Thank you, China, for the rest of the world, maybe, but their sacrifice is noted.
Yeah, we get all of our cheap products shipped over from Temu, thankfully. Providing Americans with and other people globally with very cheap household items. It's been a nice boon for anyone that needed that. Chaos Labs, the leading on-chain risk management firm, recently launched its new flagship Oracle product, Edge. Edge delivers integrated, high-precision risk and price data for any application with a market. After 2 months of securing Jupiter, Edge has already secured $30 billion in volume and more than 60% of all Solana perps volume. Edge is comprised of 3 components: high-precision price data with an integrated risk engine, automated delivery of real-time parameter adjustments on-chain, and secure delivery of custom data points via zero-knowledge proofs. Follow and reach out to Chaos Labs on X to learn more. Thanks again to Chaos Labs for sponsoring today's episode.
Hey guys, Permissionless, the event for crypto natives, is heading west to Salt Lake City, and we're bringing the biggest names in crypto together for an incredible can't-miss event. Join me and the rest of Blockworks on October 9th to hear from more than 200 industry titans, including Nick White from Celestia, Sriram from Eigenlayer, and Keone from Monad. The conversations at Permissionless will be covering the hottest themes in crypto, including modularity, restaking, the Bitcoin and Solana ecosystems, AI and crypto, rollups, L2s, institutional adoption, and of course the November election that will be right around the corner. We couldn't be more excited about this event, and it's happening in one of the most beautiful places in the US. Ticket prices will be increasing towards the end of June, so get your ticket today. Make sure to use the code so I get some credit and bragging rights from the rest of the team. Use 0x10 for 10% off on your ticket. One more thing. We're also hosting the Permissionless III Hackathon in collaboration with BiddleBox. The theme this year is a multi-chain future, to build a better cross-chain experience so I don't have to have a heart attack every time I bridge to a new chain. All hackathon participants will receive a free ticket to attend Permissionless. So if you're a developer, come join us in Salt Lake City, team up with fellow devs, and build the multi-chain future.
I guess maybe another topic that has been challenging and kind of plaguing the timeline since forever is this sort of ETH versus SOL debate that has only grown hotter and hotter. Ironically, even in Asia, in Singapore, it was a topic as well at recent conferences. We're seeing a lot of people begin to weigh in publicly and really either pick a side or align themselves in certain directions. We've got even the Eigenlayer team, Sriram is weighing in on his thoughts in regard to like Toli's thoughts or kind of thesis in kind of presenting Solana as this future state, better than NASDAQ decentralized alternative. I think there's some people hopping on that train. There's other people, maybe taking the other side, saying there's no way, like you can't beat like a centralized server. Curious. Like, I think we can take this in many directions. We can talk about, ETH roadmap. We could talk about, differences, ETH Sol. We could talk about, is decentralized NASDAQ achievable? Curious your guys' kind of first take thoughts on this argument that kind of continues to permeate, socials and the broader community.
I'll just say, when Toli and Sriram are like debating on Twitter, like sometimes what they say might be a little bit too gigabrain for me at the moment. But from what I understand, a centralized machine will always outperform a decentralized group cluster of machines, right? And I think that's like computer science 101. It's just one of the trade-offs with adding more nodes, especially with the potential for adversarial nodes to the network. And then I saw Toli's point about, okay, what if there is, a node that is closer to the news event? Let's just say it's in Taiwan or wherever, and it has to make a trip all the way to the NASDAQ in NYC. Then, it could be faster with multiple concurrent proposals, which isn't even live yet. And then I think on the other side of that, Sriram was saying that these large data exchanges also have data centers globally distributed as well. We wouldn't call it decentralized, but maybe just distributed. And there's no need for consensus on it. There's, even if it's an optimistic protocol, like that is the default in a centralized sequence, machine, because it's all your own nodes. So there's no concept of pessimism. There's no concept of like, if I'm going to trust this, it comes from yourself. So I can't see how it can compete to the same level as a NASDAQ. Maybe, maybe it can compete in the same way, like maybe you're not a high frequency trader, you're a Robinhood user, right? I mean, does it really matter to you between 2 and 10 milliseconds, or 10 and 50? No, I don't think so. So maybe that level of experience is fine for most individuals, but for most volume, which comes from institutions and HFTs, I think I find it hard to align with Tole on this one. But I mean, I'm in the position where I would love if he was right. I would love if blockchain networks could compete with Nasdaq, right? Please prove me wrong, and call me small brain, but I just don't see it right now.
Yeah, not going to be pretend to be an expert on the technicals here. The multi Watching the debate happen in real time, um, like really sizing up like who these people are and like their demeanors, and thinking about how that implies, or thinking about the implications that has for what they're building, is I think is pretty interesting. Um, I really like it when I see a founder projecting flexibility, or a team projecting flexibility. Um, and and look, I could be wrong, or like these folks' affiliations with the ETH, with the EF. Um, but I saw one account with a decent amount of followers with the ultrasound logo in the name, like lecturing totally on multiple concurrent proposers. And totally responds like, "Are you telling me that like I don't know about MCP on Solana?" He's like, "Yes, we've been thinking about this on ETH for a long time, and like this is how it works." And I think he was just completely ignorant of, like, overconfident in his expertise, and ignorant of the history that it's been a conversation on Solana for some time. So like maybe he didn't really know who he was talking to or their expertise. It also just reminds me of like the Justin Drake thing, right? Where like, he's saying time and time again, like, we've already won. I think those attitudes are pretty important for sizing up these projects, and thinking about their forward roadmaps. Um, I and it has implications there. And that's kind of how I'm seeing it today.
Yeah, I think it's never great to see stagnation. At the very least, you know, to Steelman kind of the ETH side of the equation here, it is great to see, I think, community members like really up in arms on both sides of this discussion. I think, we're seeing, if you look years ago, it's a community that was kind of aligned around a forward vision, and it playing out today. I think there's a lot more like concern about what that right kind of development path going forward looks like, and there's a lot of debate about that, and I would say that's probably arguably a good thing for them. If they were continuing to like move along at snail's pace on whatever the intended like future target was, and not make fantastic improvements to the base layer, the tech, the vision, then I mean, I think stagnation is kind of an opportunity for competitors to come in and steal your share of the market. So we've seen that a little bit with just like, I think at this particular phase, like the amount of demand that has come in, whether it be, I mean, a lot of this is trading of meme coins, trading of silly things on chain. And it's, not as achievable on like ETH mainnet and even L2s. Base has been scaling up quite a bit, actually, quite quickly, but they're doing 50, 60 TPS. And you've got Solanas and, Sui and Aptoses that are doing hundreds to maybe thousands potentially, possible on chain. And with the frequency and like activity of the things that people actually do on chain, which is largely just memes and other silly things today. It's just left us with this shift in where users and what users like can and can't do on their sort of like ecosystem of choice.
But on that point, so L2s can't do it. Base, as you said, is like maybe 60 TPS. It's running on EVM. I do think that an L2 that runs maybe an SVM or maybe something on the Move network, I do think a centralized sequencer can compete with the Nasdaq, right? Because it's it's the same kind of philosophy, and I personally don't have any issues with that in the sense that I'm not necessarily a decentralization maxi. I want the properties of decentralization, and if I can get that without decentralization, then great. And I think you can get a lot of that, maybe not censorship resistance, maybe not performant liveness, but I do think you can get that with a centralized sequencer. And so, and with an L2, you do get fallback options, even if it's not the full package right now. And so I do think something like that can compete or give you like near performance to a NASDAQ, so to speak. But yeah. And then secondly, there's this ETH soul debate that we continue to talk about, everybody continues to talk about. I don't know if this is just me, but the Sui soul debate is starting to pop up again a lot more. People are wondering if same kind of thing, earlier network, but maybe better tech, not as big of a community. It's having its moment right now, whether that be from KOLs or not. Like, I don't know if you all have any thoughts on, is Sui a credible competitor to Solana? Can Sui flip Solana in the future? What do you all think? Or is anybody on your timeline talking about that?
Yeah, I don't know about. I haven't seen the calls for flipping, but I have seen the calls for. I think people. This is like crypto's. The crypto community and like the space's favorite thing is you go down the list and you say and you look for something that is maybe a relative competitor valued lower, and you think, okay, this can surely outperform this other thing that I'm looking at. I have seen calls certainly for people making maybe like this Sol to Sui rotation. They think that like there's maybe a greater opportunity in Sui from this point forward relative to like the size that Solana has grown to. I think there's lots of talks as well continually about like the emission rate of Sol tokens. I think people look at that number and they get scared a little bit. So I think those are points to it. The big question that I have for Sui, and I think these are the same questions that like Ethereum members have when you look at like fast chain ecosystems, is there's this drawback, there's this like criticism of like, where is that demand for TPS going to come from?
It comes up quite a bit now. I'm not worried about oversupply of block space. I think you need it when you provision like resources in a data center. You'll like spin up typically like 10x of what you need to prepare for spikes, because you don't want the system to go down. So you'll see like there's a lot of like just capacity in the data center that's not used. Everyone knows the dark fiber story post the .com boom about how we didn't fully utilize that or didn't even use it for 15 years. So I'm not so worried about that. Like, it's better than hitting up against limits and then like having a terrible user experience. Second thing related to TPS stuff is that it's pretty clear these chains are getting fast right now. We'll see where Firedancer goes. Aptos and Sui, I think they have something to say from a performance perspective. And, I'm hopeful for Monad, Mega ETH, and the rest. I think what a lot of the discourse misses is that it doesn't really matter at this point. Like, the things are going to get fast and it's all a BD game, assuming... And that like assumes that you don't have this like breakout consumer app that puts wallets in a ton of hands. Like, if we just keep like grinding along with like this DeFi and like incremental social things and like deepen things, which I think we will. But if you don't like have that 0 to 1 app that just like takes over and makes like, I don't know, it was built on Algorand and now everyone has an Algorand wallet. I'm not saying that's going to happen, but like, unless you have that big moment, like, this is all a BD effort amongst the foundations to get good builders to build over there. Like, you have chains with significant installed bases in terms of like dollar value on the chain. If you're a founder, like, there's a way to profitability, like there's a clear path there. So like, the technical stuff matters a lot less today than it did 4 or 5 years ago. And I think a lot of people are still stuck in that conversation. Same thing with like mobile operating systems, right? Like, we saw the same thing play out there. So yeah, focus. I think as an investor, if you're looking at these different ecosystems, like, talk to the founders, figure out which foundation is treating these founders the most, who treating these founders the best, who's most excited to like work with these foundations. I think that that's the real differentiator. It's like that human touch.
Yeah, I think that's a great point, Ryan. One of the big kind of things that we're seeing is this convergence of design as well. I mean, you touched on it, but we're seeing this across the board, even in, maybe not Ethereum mainnet, but like Base, for example, is increasing their throughput targets quite heavily. And, the goal there is to hit a gigagas a second. I think that, maybe the implication of that is to put them into the hundreds or thousands of like, TPS, but regardless of like the number itself, the goal pretty much for every ecosystem and every piece of tech out there is to just be able to move faster and enable more activity on their chains. So I think that's super valid. And the main kind of opinion or thesis I've had on this for a while is just whether you can get interesting applications and use cases that people actually want to use on your chain. And if you can, then you have a chance to kind of keep moving. And if you can't, and you can't get anyone to build on your chain, then you're going to have a hard time moving anywhere.
This does this kind of lean more towards VC funded just applications and chains versus like maybe ICOs? Because we're talking about like community and founders and who's excited for you to build, and it's a lot about BD. And I think maybe how much you raise has a lot to do with that. So I mean, you can hire a lot of community managers, you can hire people to reach out to founders, you can have hackathons, you can market a lot more, kind of like maybe what the Monad and Berachain are doing. So does the convergence on tech lead to more reliance on money?
Yeah, I don't have a good number on how much you need to build a really high performance system. You definitely need a lot of marketing. I think Aptos raised 300. I don't know. I think kind of the one of the questions in there is like what's preferable in this kind of like new paradigm where we have like some decently established user bases like ICOs versus VC funding more broadly. And um, it seems like the industry is really coming back around to ICOs, and I think there is something like really nice and fair about ICOs. There's also some advantages, like from like a LP perspective, if you want, or like from an investor perspective. They're certainly more fair. Like people with less than millions in assets in the United States are effectively, it's like illegal for them to participate in like things that can get them multiples on capital, and the ICO like really enables them to do so for the first time. So I think that that's really great. More open access to capital is like obviously better for the investor, but also the project. Like you can, like, I think EOS raised 4 billion, like good for them. Like you can definitely like internet scale cap tables are better than like, much smaller cap tables. I think that VC money though does have like a major advantage to ICO money still. And it's it is, or like the traditional VC route. And it's that like VCs are super helpful. Like there's a reason that you go to Y Combinator and A16Z. Like they have a Rolodex. They will help you hire like critical people. They like know a lot more than you. They will help you de-risk your project by setting you up with like initial customers. Like a anon on the internet who contributes, 2,500, 25,000 bucks to your ICO can't do that, and they probably won't do that. It's like a low friction way for them to get upside to your project, but it's like they're very removed. Whereas a VC can be very involved, the good ones, right? And that's what you want as a founder. So I think although the industry is like kind of trying to bring ICOs back, and I'm here for it. I think there's definitely like a fairness aspect to it that I really that I can really get behind. But I think that it lacks the sophistication of and just like general helpfulness of having a VC partner.
Yeah, I mean, I think there's certainly something to be said for kind of the VC funding kind of underpinning a lot of these like more successful ecosystems, teams, projects, blockchains, etc. Um, the benefits that come along with this, like larger projects and foundations, and VC interest lead to, big conferences, hackathons, opportunities for these like maybe early stage, developers and ecosystem projects to, have people get eyes on their projects and maybe even, secure checks from interested VCs. And, the alternative of that is, like you were saying, Ryan, like if you're just some dev on Twitter, or, hoping people see your project and, drop some cash from their, weekly wage. They're certainly not, it's very unlikely that those people will also be able to provide you, go to market support, like strategy, marketing, other ideas that maybe you as just like a dev, or, maybe you're first time founder and you just have a great product. Like there's likely to be many other things that you need help and support with. And I think we just see that being kind of relatively successful in kind of bootstrapping and helping, maybe these strong engineering teams, put out great products and get them in front of people, especially in the space. And with how quickly like the crypto markets move, like from ideation to product, like you need to be very, very quick, or somebody else has already built it and shipped it and like it's open source, and then there's already 9 forks on mainnet, right? Like you need to have your idea and put it out like on chain and get funding and just go. So I certainly see the value from that perspective.
Yeah, I mean, something that you alluded. I mean, you can raise a lot of money in an ICO, right? And I kind of want to walk back something I said earlier. I don't know if that's necessarily a good thing. You kind of want your team to have discipline, and having a little bit of scarcity helps there to focus on what matters. If you have much more than you need, which has historically been the case with ICOs, and probably will be going forward, with just given that anyone can participate, and then that changes like the mix of sophistication, of people who can contribute. Like when you have too much money, you end up thinking about more things than you originally intended, right? You want to do bigger marketing campaigns, you want to push more products. Like, I don't know, free money. It's like if you have a kid and you're raising a kid, right? And the kid like you give the kid thing and it never everything it ever wanted, and it doesn't understand like the value of a hard day's work, and then it like has trouble on the job market like when it's older. Like that's a thing. And I know it's like a crude analogy for applying it to startups, but there is such thing as having too much money. We learned that the hard way in 2021. And we saw with the track record of a lot of these ICOs that too much money isn't a good thing. So yeah, I don't know. I'm not convinced.
Okay, guys, y'all are bumming me out. Unfortunately, I agree with everything y'all have said, but I just want to bring back the ICOs. I just want them again. So I think the conclusion is ICOs nice, fair, VCs better in every other way potentially, except for this high market cap, high fully diluted value, low circulating market cap, and then your price crashes because of the low float, and then it loses enthusiasm because price drives narrative, and then your project fails because of it. And then I think we just need some kind of go-getter team out there to bring some hybrid VC ICO innovative bonding curve token incentive model. So just if anybody's listening and you have something like that, please help the space out.
Well, I think that the more likely kind of go forward thing is not some interesting smart contract that solves it. I actually think it's just like people learning their lesson. People like getting, like, for lack of a better term, just like getting burnt or losing money or having a bad experience. You just see it in, like, you experience it in your career as like a novice investor who like chases a stock and it's going up, and you were looking at it and now it's going up and you have to buy it because it went up. And then you get burnt because you bought it at the wrong time, and then you realize not to chase. I think that probably the regulations have like atrophied this ability of like the general populace to like participate in these things in a shrewd manner. And we just have, there's going to be like a period where like people are just going to have to figure it out. Like they need to, for lack of a better term, like do their own research. And then there's going to be like services that curate these things for people, and maybe like a supply chain that like does the due diligence for you. Like if you can think of like this free market of like capital raising, if we ever get there. So the market needs to mature. I think it's more likely that the market will need to mature than there's like a particular mechanism um, that helps people like launch a fair project. Um, but not an expert on the mechanisms. But that's just my intuition.
Yeah, I mean, I think historically, and especially in this space, with like the kind of prevalence of very sharply drawn charts, consumer protection comes up a lot in this discussion of like you know if you think you have kind of um, the smarts or the ability to pick out winners, I mean, just the reality is that it's not so easy. And yeah, I mean, it's very likely if you open up access to that, there's going to be people that get burned, and they'll have to learn their lessons about, all the things that regular investors learn about sizing and um, how to take some of these bets in certain things. So that's certainly always a point kind of to be made on that side. But I think if we're talking like from maybe an ecosystem perspective, there is certainly value here in like this VC approach, in that, if you're coming onto the scene as like a new ecosystem, and you need to kind of build some traction and get some excitement behind, or even just get some teams kind of building in your ecosystem on your platform. It may be harder to just crowdfund all of that, right? Just going entirely through the ICO model, it's like if everyone's eyes are on Ethereum and Solana, naturally it's going to be difficult to do crowdfunding on, new chain, new language, new, etc. And so to get, investors excited behind that, and then to then have them also excited behind the projects building in that ecosystem, like that certainly gives you a leg up versus having to do all of that yourself.
That's actually pretty interesting. The ecosystem as like a branding for like where a retail person wants to put their ICO money. That could be an additional compounding effect there if ICOs really take off.
But if we're expecting the market to mature and to grow, maybe the existing investors in crypto who've been around for maybe a couple of cycles, and like for instance, I have not thrown any money into many of those low circulating cap coins because I kind of want the vesting schedules to end, and before I put some money in and have that fully diluted and circulating kind of converge a little bit more, because I've seen over the history of how market cap can grow but the price of the token falls, right, simultaneously. But then if we have if we continue to get new entrants into the space, they are, who maybe have no experience investing, no experience in crypto, no experience in valuation, then it kind of like we continue to repeat the cycle in a sense. We have maybe a pocket of it maturing, and then maybe those individuals go on to be VCs themselves because of they've amassed some certain wealth and thing. And I think that's like the kind of cycle that we're in now. So I don't know how much faith I have in mature investors, and I don't think VCs will mature either, because I mean there's greed there and incentives. I mean, I don't want to necessarily call it greed, but I mean, like, everybody, your job is to be a profit maximalist for your LPs. So I don't know how optimistic I am about that path, but so I'm still hoping for some kind of smart contract. Maybe I put too much faith in tech to solve these issues, but I'm not going to put it in human rationality of money and tech over the medium term.
Yeah, I mean, ultimately, there's different ways that this can go. As like an individual, if you're coming into this space as like a new entrant, if you think that you can kind of become this elite, outperforming kind of VC type and pick out winners, like, sure, go for it. Not to say that these are the same thing, but we've certainly found that the market has realized there is another option for people that just want to see the returns and don't care about the DD, and that's where the animal spirits come into play. I think the reality is that people see the returns that have been achieved on prior projects, like raising at tens of millions or even hundreds of millions, and then going to billions plus in market cap, and they think, man, I want a piece of that. But I don't know that these people that see that and come in are there for like the technicalities, or the infrastructure and why we're building some of these things. It's really just they want to see that price multiple. And so I think naturally, we've seen that the market has offered an alternative there, where you don't need to have the connections and the high bankroll to get into that if you just want to, play with volatile things. Not to say that that's like a replacement for that sort of activity or like an ICO, but just saying that I think, certainly people have realized this, and, we've kind of seen the category grow as a result of that. And then maybe while we're on the topic, one last thing. I guess we were talking ecosystems. We were talking about, I think originally, Sui flipping Sol was kind of the originator of this conversation. So I guess what I want to pull up is some recent tests on Firedancer on Solana testnet. We saw some things from Breakpoint. They were showing 1 million TPS performance. I think that was certainly not maybe an expectation for real world scenarios. I think that was using the nano token program, which is far lighter than things typically happening on the chain. But this testnet kind of performance of Firedancer that we've seen, there's some data here showing that, like, basically by running essentially what they call basic, or what are essentially like empty transactions, TPSs of like 90,000, 90K were achieved. With that nano token program, again, like 55,000 or so were achieved. And then with the normal token program, which I think you would expect with a lot of the regular trading that goes on the chain, transfers and swaps and those things, they saw around 18 to 19,000 TPS in that test. So I think today Solana has been ranging over the past few months, maybe between 600 to 1,000 TPS. So if you can look at a 10 to 20x improvement in that's quite significant over the current performance. We talked a little bit about, and obviously, who knows, in the real world, that number may change. It might be half of that. It might be a fifth of that. Who knows? But if they get a significant, improvement over the current mainnet throughput, then that's obviously a big win for the team. The timing on that is still sort of TBD for like a full mainnet launch and when validators will adopt it, but it's certainly a good step forward. I think the question there is, where we sort of had this conversation a little bit earlier, but all chains are scaling. We need to see continued attempts and shots on goal with like interesting apps, things that people are going to use. Whether that's consumer. I mean, there's a lot of things that people talk about. I don't know if you guys have anything in particular maybe that you're most excited about, but like for Solana, things that come to mind: gaming, deep in networks, social apps. What are we looking for?
Yeah, I think it's institutions coming to the mix and high frequency trading. That is going to be the highest value activity for any crypto system. Your bots, your HFT trading shops are going to be both your highest frequency and highest paying customer across DeFi things, which is the vast majority of crypto use cases today and probably in the future, and and fees and MEV to the validators and stakers, right? Which is what you want to see, value accrual to the token. So that's what I'm most excited about. I think for about 2 years, the market has underappreciated how much of an impact Firedancer could have on the crypto space more broadly. I think it's interesting that it's coming at a time where Solana has maybe 8 or so months now of downtime behind it. And even like the last downtime that it had, I think the market kind of shook it off. So, this massive increase in scale, increasing cash flows to Sol token holders, and the history of waning history of downtime. Solana DeFi looks pretty differentiated here, as well as the Sol token. So I mean, look, when it's really hard to. So like a lot of that might seem obvious, but I think it's the most important stuff. And like obviously, you're going to have like new and interesting use cases. Like you probably see more micropayments in DeFi, or sorry, DeFi and DPIN. I think like the prevalence of those really increases, but like it's really hard to know. Like as an early internet 1.0 user, it was really hard to reason about outside of broad generalities, like what increasing bandwidth and compute in everyone's pocket was going to enable. Like I never expected an app like TikTok, right? Like we knew that everyone's going to consume more video, but I didn't know what form factor was going to be in it. For a while, people thought it was Snapchat. So getting more precise than that is going to be hard. You got to take on a case by case basis. But Solana DeFi here, if they can maintain uptime and figure out like and lose this waning or and lose this reputation of downtime in the context of even 1/20th of Firedancer, I think Solana DeFi is pretty differentiated.
I might be showing my age here a little bit, but before Snap and TikTok, it was Vine for me. You would do it for the meme. So that was the thing. But I think I'm going to echo a similar thing where I do think it's the institutions, because I think that provides some legitimacy to the chain. And plus, I think DeFi is probably one of the most valuable activities that you can do on chain. And, during Breakpoint, I was personally excited to see that Franklin Templeton was looking to build a mutual fund on Solana blockchain directly. And the reason why is because, I look at some of these I talk to some of these older funds, and their hesitancy with Solana in the past has been the two main things that I hear is one, the liveness issue, which, is becoming less of an issue, and with, additional validator clients like Firedancer, we'll have backup clients now. Totally said that when it reaches 33% of the network, Solana will remove the beta label. So I think those liveness issues are going to be a thing of the past, hopefully, maybe not immediately, but we're on the path towards that. And then secondly, the other thing I hear about these funds' hesitancy for Solana was the lack of a multi-sig. Not that Solana doesn't have multi-sigs, but something a little bit more battle tested, like, Safe is on the Ethereum network. There's Gnosis built this protocol Safe, which you can use throughout the L1 and multiple L2s. And, there's the equivalent of that, I think, on Solana network could be Squads, but I don't think it's maybe not battle tested enough for different funds to be comfortable moving millions of dollars on to the network directly. Because, it's one thing to be down 5%, but it's another thing to be down 100%. So I think that these institutions are starting to move on chain, adds legitimacy. They'll probably provide more docs and support to all the others who are looking to mimic something of the same. And I'm excited to see more of this continue over the future.
Yeah, I think you guys call out a big point here, and I'm just going to pull up the Solana DEX activity dashboard from the Blockworks Res platform. The key point here that institutions, funds, etc., larger players driving a lot of value to the chain. I think we can really see that if we look at like DEX volume, DEX activity by these wallet segments. It's pretty clear that like large, high volume in terms of like lifetime trading volume and consistent trading activity is driven by these larger, whether they're bots or institutions or larger players playing. Regardless, it's few wallets objectively. So like DEX active addresses by wallet segment, we can see that wallets trading over 500,000 in lifetime volume. There's maybe 30,000 of them out of like 20 million total, where you've got tens of millions of wallets with less than $10 in total lifetime value, and yet the percentage of overall like volume traded tends to be around like 70%. This 500k plus group capturing maybe over 70% of total volumes, and we see that consistently throughout time historically, where these larger players kind of tend to drive a lot of the kind of value of the activity on the chain, is maybe the way to say it. So I think you make great points about HFT institutions continuing to see like larger players kind of come into the space. That is where a lot of the value and a lot of the trading that we see on chain today, at least for DEXs, is happening. That said, things like deep in networks, things that can push lots of like low fee, low cost transactions. Obviously, there is value there. It's just more in the scale, right? Like you need hundreds of thousands, millions of people using those things, and then that drives meaningful revenues. But it's a very different picture from a few large players can like really move your network basically.
Yeah. I know that there's a lot of thoughts too around social driving a lot of on-chain activity. I'm a little skeptical there. I think like from an asset issuance perspective, one feature that has PMF is asset issuance on social platforms. So think FriendTech or a pump fund. I think that I think it's pretty hopeful to think that outside of asset issuance, you're going to see social drive a lot of on-chain activity. Um, the reason is because a lot of social today is very high fidelity and interactive. So think like video, and just that's like it's hard to do. You can't do that on chain, right? So given how much video has taken mind share and probably just screen time in the social sphere, I doubt that that a social application, the traditional the traditional social styled applications are going to drive a lot of on-chain activity. You can already see that with Farcaster, right? They're really minimizing their on-chain footprint because you really can't do a lot of it on chain, even in a high throughput system. So I would still expect, even in the social realm, the things that drive on chain activity to look a lot more like DeFi than they do social.
Yeah, I think that's fair, and I think maybe part of the thesis for social related things coming on chain may simply come down to what look like DeFi activities, like you're saying, in terms of transfers or payments. I think we see this in the live streaming space today. Obviously, there's ad revenue um, related to video content, but a lot of the kind of interactivity of live streams, for example, is driven by creators offering interesting ways, like for their viewers, their subscribers, to like maybe directly interact with the stream by donating or like paying a little bit, a dollar, $5, $10. Maybe they'll get text to speech to kind of happen during the live stream, etc. Like different little games like this. I think there might be an avenue for kind of an on-chain offering of this type of idea. Friend Tech was an approach with like private text groups, but if you can sort of abstract away that tipping process, and maybe the live streams don't need to be on chain, but if the tipping and the other things, and you can put betting and tokens and other things related to these videos and live streams and other kind of high fidelity content, that might be where users are willing to kind of get in on the action. The big, like if you look at the business model of like something like a Twitch, they have bits, which are a currency that you can use to kind of micro tip creators, but they take, I think, anywhere from like 20 to 30% of that for themselves of a cut. You could enable this on chain, and the cut could be far lower to a business, and the fees to like do that on like a Solana or a Sui, like pick your favorite cheap fast chain, would be less than a penny. So there's an opportunity to do that at scale if you can just like maybe abstract away what it is. Like I think people in like gaming, and I think normal people just interacting on socials, I think crypto still has a little bit of that negative taste in their mouth maybe, but if there's an easy way for them to like give $1 to their favorite content creator, they're probably up for it, because they're probably already doing that today. All right. Well, I think we've covered enough topics today. Any other maybe big takeaways that we want to drop for folks before we close out today for the week?
Bullish.
Bearish price targets, bid China, bid Japan, bid all markets.
I think study the ETFs. That's what I think. Right. This is a long-term passive flow game that I think most of crypto doesn't understand. So I think when next year, if we can get some higher numbers and we move past the regulatory uncertainty, then we can maybe see what it's like for institutions to FOMO. So yeah.
Study cash flows.
We're walking into October. That's all I'll say. All right. This has been a great ep, guys. Thanks for coming on, and thanks to all the listeners for tuning in. Appreciate it.